What's up, guys? Stas here. So the stock market is not looking too great right now. S&P 500 is currently down $40, down about 1.2%. The Dow Jones down $360, down 1.35%. And the Nasdaq's currently down $270, down about 2.5%, with about 20 minutes left in today's session. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over whether or not we're going higher in the market, lower. We're going to talk about a couple of scenarios here, and I also want to break down the top stocks that I'm looking to trade amidst all of this volatility right now in the middle of July as we're wrapping up July in 2020. So a lot to go over in this video, guys. If you guys find value, I'm sure you will, hit that like button for me, consider subscribing to the channel, and check out all the free links down below in the description box if you want to join our Discord chat, Facebook group, and if you want 2 free stocks from Webull valued up to $1,400, all you have to do is deposit $100 into the account, and that is when you get your 2 free stocks. So let's get into it, guys. Again, we have about 20 minutes left in the markets today, and it's not looking too great, and it's not looking like it's recovering. S&P 500 down 1.3%, like we said, and on this intraday chart, you can see a lot of the carnage came at about 12 p.m. Eastern Standard. Right around lunchtime here on the East Coast, that is where the floor fell through and the bulls came in full-fledged. You guys can see 3260 tried to hold on the intraday chart. You guys can see we held that at about 10:20 a.m. this morning, and then we tried holding it again right around noon on the East Coast, and that is where we collapsed, right? And from there, S&P 500 went down about 40 points to its lowest point at 3220, which is a very, very critical point. We'll get into that in a second here. And ever since it hit that point, we've been finding some sort of support, some consolidation, but we clearly have not recovered quite yet. Now, the question is, are we going to recover, or are we going to fall through the floor like we did earlier and go down even lower? Well, to do that, to answer that question, we have to scroll back a bit and take a look on this 4-hour chart to see exactly where we are on the S&P 500. You guys can clearly see, A, we're still uptrending, and B, that 3220 level, that's actually a critical level of support, actually a level of resistance from a couple weeks ago, or a couple days ago rather. Also a couple weeks ago at about 3220, that is where we got rejected in the beginning of June. And stemming back even further from the beginning of June, I mean, we've held 3220 as a support back in December of 2019, back in the beginning of February of 2020. So needless to say, I mean, this is a pretty strong level on the S&P. And I'm thinking if it breaks, I mean, if we end up going lower from here, we could end up going, if 3220 breaks, we could end up going easily, and going back to this 20-day chart, we can see this, we could end up going easily to 3200, where we held back in the middle of July, literally last week, and from there, 3180, and the more probable point that I'm thinking we'll get to on the S&P if we see a further sell-off is this 50 SMA on the 4-hour chart, and that's putting us right around, again, 3180. And it's not much of a drop from here. I think a lot of the drop, a further drop, would come if we broke under 3180. If we get under 3180, guys, we might be going 3120. That's another big level here that we can see based on this 4-hour chart. And under that, maybe even $3,060. And $3,060 could be a pretty healthy spot. I mean, from there, you can see about 250, 200 points of the S&P being taken off from where it is right now. And that's a healthy little chunk. I mean, that's a pull down of around 6%. And judging this 4-hour chart on the S&P, we can see that is where it's held over the past couple of weeks, right around this 180 SMA. So that's if we take out 3180 and 3120, those two big levels. I think if that happens, we might be going down at 3060, 3070. So watch these couple of levels here. And why did the markets drop in the first place? No one knows exactly why the markets drop. You can infer, you can make, maybe some guesses as to why the markets drop. But today we have some pretty decent idea maybe of why the markets drop. We have an idea. We got jobless claims numbers that beat out what we were expecting. I mean, jobless claims numbers came in at 1.416 million versus the 1.3 million estimated, and this makes it the 18th week in a row of over 1 million. And every Thursday we talk about this on the channel, guys, and every Thursday it's been the same. The past 18 weeks, we've gotten over 1 million jobless claims. And if you guys want to see this in a chart pattern, I actually got this from an article this morning I was reading. This is the jobless claims numbers over the past 18 weeks, and you can see here for the first time in the past 16 weeks, there's actually a reacceleration in the numbers. That just occurred today with the numbers they reported. So that could also be, maybe fueling the sell-off, maybe a little bit. I guess you can say it could be. And you can see, initially we had about 7 million jobless claims. It dropped to 6 million, dropped to about a little over 5, a little over 4 the next week, a little under 4, a little over 3 the next week. And you guys can see it's been slowly dropping down. And over the past 1, 2, 3, 4, 5, 6, 7, 8 weeks in particular, it's been under 2 million. And last week, we got, I think, 1.3 million, and today with the 1.4 million, that's where you're seeing the reacceleration. So the question here is this the beginning of a further spike in the jobless claims numbers? As we're seeing the CV shutting down California, a lot of these locations, restaurants are shutting. Are we going to start to get a climb in the jobless claims numbers here? Are more people going to start filing for this? Are more people going to lose their jobs? This is the question, and this is kind of what could be spooking the markets here. And if this gets worse, it could continue dropping the markets, and maybe we do get that second crash that a lot of people have been talking about here the past couple of weeks. If we start getting a lot of jobless claims, the economy hits the fan again like it did 3 months ago, that could spur another big sell-off. So let me know down below in the comments, what do you guys think? Do I think the sell-off's going to be as worse or as bad as it was 3 months ago? No, guys. I don't think it's going to be that bad. Are we at risk of seeing a spike in jobless claims? Yeah, I think, yeah. But again, not as bad as the crash was. The jobless claims won't be as bad as they were back here, when it was at 7 million almost. But a spike is possible, and that could end up hitting the stock market. So always understand that the market's going up. It's not going to last forever, so you always have to have some cash on the sidelines in case the markets drop. And in this case, you'll be able to average in positions. You have a hedge against the market, and you can really gain money while the market drops. People don't realize cash is a position. While the markets drop, you're getting negative returns. And cash, it stays at zero. You're not getting any returns, but you're not losing anything either. So in theory, you're beating what a falling market would be if you're just holding cash. So look at it that way, guys, and just keep an eye on those jobless claims moving forward, and any big, data coming out about the economy, stuff like that. In this situation we're in this crisis, could easily continue to fluctuate, the markets here. So let's get deeper into the Dow Jones. It's down about 380 right now. We can see a clear resistance and a rejection at around 27K. So the looks of it is the Dow is headed down to 26,000, flat. Actually, wait a second. It's at 26,600 right now. So no. Let me rephrase that. It's headed down to 26,400. That's where it's looking like it's headed. You guys can see on this 4-hour chart, that is a resistance stemming back from the middle of June. It's actually also where this 50 SMA is on the 4-hour chart. So watch some support for the Dow at that point, 26,400. If that breaks, that is where we might see another leg down to about the mid 25,000 level, 25,500. 500. That would also put us here on the 180 SMA on the 4-hour chart, this gold line that you guys are seeing. So is this sell-off today making me panic, guys? No, it's not making me panic, but it's making me understand where the markets could go, and that the markets don't always go up, even though I always understood that, but I'm trying to make you guys understand that, especially beginners. The markets don't always go up. I mean, it doesn't. A lot of the time it goes down, and it can go down. The market can go down for an extended period of time. That's what people don't understand, right? So the Nasdaq here, down about $300. Today's pull down is pulling us straight to that 50 SMA level of support that we've held over the past couple of months here. You can clearly see it on the 4-hour chart. So tomorrow, next week, watch what the Nasdaq does in this general area. At this point, it does seem like it is breaking below it, but give it another day, give it another 2 days for more data to pull in here to see kind of what buyers and sellers are doing. And if we start seeing some stagnation, some support at around 10,005, 10,006, we start to get back up to that level, that could give you some indication that, yeah, the 50 SMA on this 4-hour chart, like it has been over the past couple of months, yet again, it's acting as a support. But until then, this is still at risk to fall down even further. I'm thinking that if this clearly breaks, the 50 SMA clearly breaks, and we go even lower, I think 10,400 is coming. And then from there, an even bigger target could be around 10,000 flat, 10,100. And not to be a pessimist, but a lower end target here, you guys have to realize, is around 9,700. That would put us right at this 180 SMA. And how great of a pull down would that be with how overheated tech is at this point? How great of a pull down would it be if the Nasdaq pulled from 11,000 all-time high down to about 9,700? That would open up around an 11% window on the Nasdaq. I'm not against that. I would love that. And, with all these big techs reporting earnings, we had Microsoft yesterday, and we have Amazon, Apple next week. We'll see more of a direction of where we could be headed, at least in the short term here. So let me know down below in the comments section, what are your thoughts on the jobless claims? What are your thoughts on the markets in general, where we're headed, higher or lower? I'd love to know. Let me know in the comments. Now, what did I personally do, guys? I took some losses today. I took a profit, but I lost out a lot of money. I could have made more money. We'll get into that in a little bit. But it wasn't too great of a day for me today. I actually tried day trading Tesla today. And get this, guys. Get where I bought into Tesla today. I bought into Tesla, and you can see now it's trading at about 1,500 flat, down about 6% almost. I bought into Tesla, excuse me, at about $1,640. Yes, I got in. I got faked out. That's the truth. I mean, I got faked out pretty hardcore on Tesla today. And I'm trying to think, where did I buy it exactly? I think I bought it straight out of the gate, which is another mistake to avoid. And I went against my own rules, to be honest. And that is, don't trade the first 30 minutes. I know it's kind of crazy. It's like a kid in a candy store. You go in the candy store and you can't help yourself. It's kind of like the markets at 9:30. The bell rings and you can't help yourself. You start buying stocks. You do irrational things, which is why, again, I like not trading for the first 30 minutes. I typically do that to kind of see how the market shakes out, see what direction the markets pick. And if I did that today, I would have saved myself some money on Tesla, but I got a little antsy. Again, I got like that kid in the candy store. I jumped out, the markets jumped open, and I was like, Tesla, I'm buying you, Tesla. And I ended up buying Tesla at $1,640. Yeah, it was right here, guys. It was right here, this little J-hook. I was thinking it was going to break out, but like I said, I got faked out. So I got in $1,640. Could have took a pretty quick profit there, maybe to $1,650, but I didn't. I held on, and I ended up taking roughly a 2% loss. I didn't have a stop loss on here. I kind of had a mental stop loss, which is simply, no actual stop loss. You're simply disciplined enough to cut your losses at a certain rate. And for me, I like cutting losses at around 2-3%. And I figured, we failed to break out. We sold off, and I was like, yeah, it's time to sell this thing. And I ended up getting out. I think it was close to 16.10. Let me double check and see the percentages here. Yeah, it was closer to about 16.05, 16.10. That's where I cut the losses. And yeah, I lost about 2%. And I did lock in some profits on Amazon, but I said I lost money on this, although I locked in profits. And the reason is because I left a lot of money on the table. You guys remember 2 days ago when we saw that big rally in tech? This is a mistake on my part. I should have sold out of Amazon. I bought that day at $3,004, and I should have sold out at the market close. I got a bit greedy. It's okay. I learned from the mistakes. That's the idea, right? You're supposed to learn from your mistakes. And I ended up selling out today at 30.60. I ended up selling out more towards the beginning of the day here at about 10:20 a.m. Eastern Standard Time. And I ended up taking a pretty big loss on the amount of money I could have made in hindsight. If I sold out at 3,200, I would have made another 120, 140 bucks on the shares that I sold. But again, 30.60 is where I sold, and yeah, I locked in a little profit from $3,004 up to 30.60, and at this point, I'm honestly looking at a potential re-entry in the next couple of days in tech, in Amazon, but I'm just playing it patient. And that's what I did today, guys. Little loss there. Amazon still locked the profit in, but I could have locked a lot more in a couple days ago, but it's okay. It's the nature of the game here. And I'd love to know what you guys did down below in the comment section. Now, let's talk about AT&T. They just reported earnings this morning, I believe. They reported 83 cents versus 79 cents estimated. Revenue came in at $40.95 billion versus $41.02 billion. So they actually missed there on revenue, and they beat by a pretty solid margin there on EPS. And the stock is clearly still struggling at about 31 to 30 bucks. This is where it's actually been struggling ever since kind of the beginning of this crisis, the end of, honestly, guys, ever since the end of February, this thing has gotten crushed from 38 bucks to 28 bucks, and it's one of those stocks that hasn't really recovered quite yet. It's paying a fat dividend around 7%, and looking at it from a trading perspective, I wouldn't touch it unless it took out 31 bucks. 31 bucks probably to be safer, and from there, I think an upside target could be $32. An even higher target could be around $33 to $35. So watch AT&T here, guys, and understand they are a debt-ridden company. They have so much debt. A lot of these large cap companies also have a lot of debt, and you have to be careful with them. But yeah, just a quick little disclaimer. AT&T has a lot of debt, guys. A lot of debt. So that's an earnings I wanted to go over. Not too many other ones in this video. I mean, United Airlines is reporting. I think Twitter reported as well, but just dive into those on your own. I don't really, follow those companies too much to dive into them here on the channel. But to go into some other ones that I'm looking to trade that are not necessarily reporting earnings, Activision Blizzard, ATVI, is looking very interesting right now from a swing trading perspective. And it's very clear here on the 6-month, this 4-hour chart that we're looking at. It's holding support at 79 bucks. And this is a pretty big level of support stemming back, if we pull up this 3-year chart, stemming back from 2018. I mean, 2018, this is where we topped off in terms of Activision Blizzard. It was a resistance, and we all know at this point, when we break resistance, it becomes support. So we broke that resistance, we rallied up to about 82.50, and now we're pulling back to test it as a support. This could open up a very strong entry point for Activision. I mean, today it's down 2%. From its peak, it's down almost 4%. So looking at this as a swing trader, I am very excited. So I'm going to actually get into this one. Not today. I mean, the market's going to close in 2 minutes, so I can't get into it today. But tomorrow, if we hold 79, 80 bucks, Heck, it could even be a quick day trade, guys, back up to $82. So I'm kind of waiting to see if that happens. If $80 rally up to 82, that is very attractive. And if $80 breaks, 79 breaks, we could be going to about $77. That's another big level. And that could be roughly where this 180 SMA here meets on the 4-hour chart, which could be an even bigger incentive to pick up some shares at around 76, 77, because the 180 SMA is where Activision has been holding as a support over the past couple of weeks, guys, ever since, or months at this point, ever since the end of March. So watch this one. Watch Electronic Arts, another video game stock here, ticker symbol EA. It also took a beating today, down about 2.3%, down $3.15. I'm thinking EA could maybe test 130. I mean, it seems like ever since it broke this 50 SMA, a lot of sellers came in on this 4-hour chart, which actually happened today. So we might actually be selling off to 130, 131, and that could be getting us down to, let's say, this 180 SMA at about 128, 130. But either way, on this 4-hour chart, that is where I'd load the boat. I'm being quite honest, guys. As a swing trade, and there goes the markets, closing down red pretty big. As a swing trade, EA at 128, 130. I'm going to be loading the boat on that one. I think it's a very good opportunity. And another one here that is risky. It's risky, but it has opportunity above $24, and it actually went up today despite the markets getting crushed, up almost 2% today, is Cheesecake Factory, ticker symbol CAKE, and it actually took out almost $24, and I've been talking about this on the channel, guys. 24 is a resistance from a couple days ago, a couple weeks ago, a couple months ago. I mean, this has been a resistance for a long time here on Cheesecake Factory, and there's a lot of headway ahead. I mean, as, let's say, the economy gets back to normal, I'm kind of looking at this more as a Starbucks play. I think Starbucks has a lot of potential out of this crisis, and I think Cheesecake Factory is the same, and a lot of these restaurant stocks, I think they have a lot of potential. And just taking a look at this, anywhere from 24 out could be a breakout to 29, 30 bucks. I mean, that's kind of where we rallied back in the beginning of June. And if we get good news, more good news about vaccines, about CV going away, California reopening, let's say, for example, economy going back to normal. Any type of news like this can shoot the stock up. I mean, we've seen it go up 10, 15% in a single day. So I'm watching this one. It's risky, guys. It's risky because if the economy gets shut down, it can get slammed again. But if you're an optimist, you think 2 years we'll be back to normal. And even in a couple months, we slowly get back to normal. Cheesecake Factory at this point could be a very solid play. And NEO stock today looking pretty bearish, guys. NIO. You guys can see, especially on this 20-day chart, we failed taking out the resistance from the 15th and the 16th of July. We failed taking out 1350 on the 21st of July there, and today we failed taking out 1350 again, and we're being rejected by the moving averages here on the hourly chart. And it seems like at this point, NEO, the floor can drop out of it at any point in time. Does that mean I'm very bearish on the stock? Absolutely not, guys. I think there's a lot of positive prospects for NEO in the next couple of years, but I think in the short term here, it might have gotten a bit overheated, so it's going to sell off a bit further. That's kind of what I'm seeing here, and that's what the technicals are telling me. And ultimately, I'd love to get it at around a swing position at $9, $10. I think that's attractive. And with today's movement, and especially if $12 breaks, guys, you guys can see $12 has been holding the past 2 days. Especially if that breaks, I mean, we could be going down to that $10 level, no doubt about it. So that is NIO here, NEO stock. Watch for some lower movement there. Ulta held up pretty well today as well, up 20 cents, up 0.1% as the market sold off. That is showing me the strength at $205 to $200. That's very good. And like I said yesterday, it still stands today. I'm looking to buy Ulta at above 210. Above 210, I can see it going to 220, 230. And if we're talking higher upside and a longer term time frame, 250, 260 is not too far out of reach. So Ulta, just watching for that 210 break there on the upside. AbbVie, ABBV, healthcare company, also did well today, up 33 cents, up 0.3%, and ended up solidifying the level we talked about yesterday at about $98. Old resistance stemming back from, I think, a couple years ago. You guys can see here on the 3-year chart. Back in 2017-18, $98 was a resistance. So the fact that we're holding it as a support, that is a pretty good sign right here as of today. And yeah, I mean, if this ends up taking out $100, I've said a lot on this channel that I can see this getting back up to 110, 120, no problem. And even in the short term, guys, I mean, if you're moving more money, if you're trading with more money, let's say $10,000, $20,000, a smaller move from $98 to $101, which is what could happen literally in these next couple of days, that could be even more worth it for you as well. But looking at a longer term perspective, again, especially on this 3-year chart, I think 107 is the next bigger target. And then from there, 120 if we're taking a look at 2-3 years from now, maybe even a year and a half from now when it comes to AbbVie. And a couple of other ones here. AMD, guys, pulled down today, down about 3.5%. Probably some profit taking after that good news yesterday that AMD got in terms of some of its products. We got a pull down at about $59. That solidified as a new support. You guys can see it. And are we up? Wait a second. What the heck happened here? Are we up after hours? Holy crap, we're up after hours. So yeah, scratch that, guys. I was going to say, I mean, if we hold 59 tomorrow, 50, $60 even, watch for the move back up to the 63 level, and it's happening here after hours. I don't know what's going on. Let's take a look at this live news tab. Something must have came out. I don't know, but either way, AMD's moving up to $62 here. It's up $2.50 after hours. Let me know in the comments why that's happening, if you guys know. And two other ones here. I got a subscriber request to talk about Home here at Home Group, ticker symbol HOME. I think they actually report, or actually, did they already report earnings? They already reported earnings, it seems like, about a month ago, a month and a half ago. Actually, no, more like a month ago. And the stock's up big time. I mean, the stock is up from $5.70 up to about $9 over the past couple of weeks. Now it's finally seeing a pull down about 5.5%, 50 cents today. And if I'm looking at this, I mean, 3-year chart, we can see it's breaking the downtrend. That's a good first step in a recovery for at home. But knowing it's a retail business, and like the restaurant stocks too, this is a very risky play, because if things get shut down again, this could go right down the toilet. And from there, I mean, it could go back down to where it was a couple months ago, which was at about $1, $2. So that's the risk when it comes to At Home Group. But ultimately, we are seeing a breakout. I mean, we are breaking the 50 SMA here on the 3-year chart, which has been a resistance on this stock, so that's very good. And taking a look a bit deeper on this 90-day chart, I mean, you guys can see, even on the 4-hour chart, you guys can see there's a lot of momentum over the past couple of weeks. It's no doubt about it, and especially over the past couple of days, which scares me. You guys can see literally we're up a lot these past 3 days. I think there was some news that came out regarding At Home here. I forget exactly, but either way, I'd wait and see for a cool off. We're seeing a cool off today. Could this be the start of a further cool off? It certainly could be. And let's say if we start rallying to the mid $8, that means we might be pushing back up to the $9, because ultimately we are seeing a little support here on the intraday chart. So this could be a bottom, but just wait and see for that pop to the mid $8 to confirm that. But ultimately on At Home, guys, I'm a bit skeptical. I'm being patient with it. And there could be more upside as the economy opens. That's the truth, guys. And this is a really battered down stock, so it could come back. And another one is Virgin Galactic to end off today's video, guys. I think there's a lot of potential with this one after today's dip. Take a look at what happened. We rallied all the way up to 27.50, guys. 27.50. We talked about this. If we pull out to the 4-hour chart, that is where we struggled back in the beginning of March. Did we not talk about this in previous videos? We got rejected there to a T. So this means, and especially the fact that we held the uptrend on this hourly chart, this means we might be rallying back up to 27.50, right? Notice how we held 24.50, 24.70. That was the high back on the 17th of this month. We held that as a new support and the 50 SMA into the close here on this hourly chart. That gives me hope that there's a 10% move waiting to happen back up to 27.50. And I've been getting questions, Stas, where could it go above 27.50? Well, the truth is, guys, I think the next range is going to be $30. And if it gets to that point, it could be getting a bit overheated. Let's be honest. It could be getting a bit overheated to the point where we might see a further pull down. I'm talking a bigger pull down, 20% from there. Not saying it's going to happen, but it could be in a healthy point. For it to see a pull down like that. Maybe not a collapse like it collapsed a couple months ago, but I wouldn't be surprised, let's say, if it went to $30 and then it pulled back down to 26, which could be around a 10-15% pull down, right? So watch out for this and all these other stocks that we talked about today. I hope you guys found value in this video. If you did, hit that like button for me. Consider subscribing to the channel. And don't forget to check out our Discord chat. It's free. Our Facebook group, that's also free. And you can also get 2 free stocks from Webull. All of these are linked right down below in the description box. And how to get your 2 free stocks, all you have to do is use that link down below, deposit $100 into it, and that is simply when you get your 2 free stocks after a couple of business days. So yeah, that's it for this video, guys. I hope you all had a great day. Hope you all stay safe out there. I'll catch you all on the next one. Thanks again for watching. As always, peace out.